Good day, traders from all over the world. This is Mdlalose. Ladies and gentlemen, I want to teach you about something completely different. It's not really completely new. I think I have done a video previously about this particular trade setup, and I just want to show you this trade setup together with a couple of confirmations that you can actually look at in order to be almost sure that it's the direction the markets will go. So I'm not saying almost sure, meaning 100% sure it's going to do to go into that particular direction. What I'm saying is for you to have a higher probability on your side, to stake the odds in your favor, because when you stake the odds in your favor, most of the time you will get into very good trades, because when you trade there has to be something that you are looking out for before you take a trade. It's not just like placing a trade and then hoping for the best. There has to be something that you need to see lining up before you take a trade. So you need to follow your trading rules. You need to make sure that you follow your trade setup. And then another most important thing as well, ladies and gentlemen, is actually the journal, making sure that you write down all your trades and know exactly what is happening. So let's get right into it. So first thing is first, the first time frame that you need to go to is the hourly time frame. Okay, it's the hourly time frame. Why? Because on the hourly time frame you need to identify key market turning points, or where the market reversed. Okay, what do I mean by that? For example, you see I've drawn this line right here. This is where the market reversed and went back down as indicated here, right? And then you can clearly see here this was also a market turning point. The market went up, so this is a market turning point. And a clearer one will be this one in this particular zone. Even this one as well, you can count it, is still fine, but this as well right here, it's a market turning point as well, because the market went down, went up, went down, and then it shot up. So when you identify these market turning points, now this is what you need to see. Like, let's look at this trade setup that happened today on GBP USD. The date is the 24th of January 2020. So this trade actually did set up today in the morning. All right, these are the type of trades that you need to look out for. Okay, now let me show you exactly what happened in this particular trade. All right, so number one, this is yesterday's trading. The whole day yesterday the market did this, right? Sort of like a short day, because when you look at where the market opened up here, so we can safely say this was a short day. The market did short because where it opened and where it closed, even though it was really close, but you can clearly see from there to there the markets were short. It was 20, it went down by 23 pips, so it closed on a short. Okay, but now this short, a lot of traders saw these things happening, right? Think about when traders see this, what do? They sell. Think about when traders see this move down here, what do you think they do? They sell. So we had 1, 2 selling levels, not really levels, selling points where the market sold. The market sold here and the market sold here. So 1, 2. So with high probability now, you know that people were short yesterday, and this is yesterday's high. Okay, it so happened that also the market failed to take out the previous day's highs, which is this high right here. Okay, and then when you look at this high again, there was a short there and there was another short there. So it means that here there were shorts from the 22nd of Jan, and there were shorts stop losses from the 23rd of Jan, right? Because of this short and this short, and then these shorts right here, there were stop losses from 22 Jan and 23 Jan. Ladies and gentlemen, this is a little bit difficult to understand, especially if you're a new trader. This stuff, I always say that it's not really for new traders, because it's difficult for them to process this information. But you clearly see short, 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 short. The market went down. Now today, when the market punched here, right? As a smart trader, you must wait and see if the market will close above here and continue to make higher highs and higher lows. You are very patient. You wait. Why? Because already in the morning you've marked your spots, that this spot here, this high, there's still stop losses on this high, which is the previous day, and also the previous day before this one, there's also stop losses as well, right? Yes, identify these things. Trust me, you will see them. It's going to be easy to see them in the future, right? So now when you identify these shorts, remember, forex trading is all about confirmations. Forex trading is all about identifying the probabilities, or pushing the odds in your favor with high probability. So, and then when you identify this, what I like is to go to my data. Okay, I know I've never shown people this data option. Okay, I've never shown people this data option, right? Don't worry about this arrow. Focus on the charts, what I'm going to be showing you. So at this particular spot, when the market punched there and this candle went back down, let me zoom this in. Okay, when the market went up here and this candle came and closed below, if you put a vertical line on this candle, right? Let me delete this top indicator because it will confuse you for what I want to show you. Let me remain with only one indicator so that I can show you what I want to show you. So when the market went up, came back and closed below here, if we go to the data, if I put my cursor on the data, you can clearly see, right, on the left hand side where it's written indicator 1. Now I need you guys to focus here. If I put my cursor back there, right, here's my cursor, you can clearly see says up ticks 0.000, down ticks minus 25,000. Okay, sorry, minus 25.90, not 25,000. It means that the sellers are dominating. It means there's absolutely no buyers when there were absolutely no buyers when that candle closed. The dominating ticks were the sellers ticks. Let me actually show you on the next candle as well. On the next candle as well, we can clearly see it even pushed even higher, 35 and 0 buyers. It means that when you saw the first candle, not even the second one, after identifying those highs, you saw this and then you realize, wow, there's 25 to 0, there's absolutely no buyers. It's your time to get into the market. So at the first close of this bar, you take a short right there at the opening of that bar, of which it went down 43 pips, and we are still in right now. I don't know where you're going to exit. That's entirely up to you. But you've identified everything else. On top of that, now you need the tick volume to show you with high probability what the markets will do. You simple put your tick volume and then open your data, and then your data will tell you exactly what is happening, because your data will show you. So for example, if I go here just to show you how this indicator works, right, you can clearly see up ticks 8.4, down ticks 0.0. It's still good because there's 0 sellers there. It's only buyers that are dominating on that bar, you see. So if ever it's well balanced, you will see for example on a candle like this one, right, if I put my cursor there, it says up tick 0, down tick 0. It means that there's an equilibrium, there's an equal number of buyers and sellers. Trading is all about identifying who's dominating the markets and simply following the dominators. Very simple. Identify whether the buyers are dominating, simple, be a buyer. Identify whether the sellers are dominating, and simple, be a seller. And that's the exact case that happened here, ladies and gentlemen, this morning on GBP USD. Watch this video over and over and over again until you understand exactly what I mean. But yes, the information is there on the chart, the indicator. If you look for it, it's free online. You can pick it up. It's free online, freely available. But yes, identify the levels of interest, the previous swing points, and then simple wait to identify whether the buyers or the sellers are dominating, and simple execute your trade as well. You can clearly see if I put here 7.8 ticks, they were dominating to 0, and then here we had sort of like equilibrium, minus 0.0 and minus 0.0 is minus 0.6, and then you go to the jump through the next one, 34 buyers to 0, which is 34% up of buyers. It's very, very high, so it means that you need to be a buyer at this point here. But in this particular case, even on the 1 hour, we're still dominating. You can clearly see the sellers are still very much in control, so we might highly likely be running for the stop losses that are there before it returns. So if it doesn't get there, guess what? It doesn't really matter, because you close your trade when the tick volume starts switching to the opposite direction. Mdlalose, stay blessed. As I always say, guys, subscribe. I'll be putting out a lot of videos, so press the bell icon there. Make sure that every time I post a video, you are the first one to watch my videos. Mdlalose, stay blessed and happy trading.